Support and resistance levels are overrated. Those things will make you money, but your risk to reward 1 to 3 are those are key things that can build your account over time. And understanding that you just have to have the ability to execute with courage, knowing that you're playing the numbers game. You'll win some, but if you're using a good risk to reward system, you would make money in the long term. That being said, understand one simple truth about support and resistance, which I'll be explaining in the chat in some minutes time, that you want to focus less on support and resistance and knowing that they are just key levels and your job is to follow the trend. Like it's often said, the trend is your friend. So finding out those higher lows and higher highs, understanding that you should be taking trades at the higher lows for an uptrend, and when it comes to a downtrend, knowing those lower highs and lower lows, understanding that you should be taking trades at the lower highs are just the basic tools in your trading system. So let's get to the charts. So if support and resistance levels are highly overrated, especially for retail traders who use them a lot, then how can you understand the market and at the end make money, which is the goal for everyone? First, I'll show you how this is an example of a support and resistance that everybody is familiar with, or people who are taught about forex, they start with this kind of support and resistance, and this is where you are meant to sell. You have to sell in the resistance area, then buy at the support. So that's the general idea of support and resistance. But the problem with this is that following the fact that you need to sell at the resistance and buy at the support doesn't mean that it will always work, or it will just work because you see a support or resistance. The market has so many dynamic factors which affects it every day. So today a system might work, but tomorrow it might not work. But what can you do to understand the market? The first thing you need to understand about the market is that there are 3 types of market structures. So there is a ranging market where support and resistance majorly works in a ranging market, but the market is not always ranging. The market is always tilting to a certain direction in the long run. So while in the short run you can make profit with support and resistance, but you need to also bear in mind that it is not hard and fast that it will always work all through the year. You need to know when the market is no more consolidating or ranging and support and resistance won't work as it was working initially for some weeks or months. Then start following what the market has always been doing, which is tilting towards a trend, going towards a direction. And what we can see for an example is CAD JPY. CAD JPY has been ranging since August, or even August till September, and it just broke out of the range. But what matters most is not the support and resistance, is understanding the key levels. This support and resistance are merely key levels to guide you in making decision. It doesn't mean that at every resistance you should just sell, at every support you should just sell. It only means that when price has tapped a place twice, this is the first tap, then this is the second tap, that means that area has proven to be a significant level. So that's why it's called a resistance, the same as support. When price has tapped somewhere twice, not once, the second one makes it a support, not the first one. So that place in history becomes a significant point, and that's where buyers in all over the world are looking at, as well as resistance where people all over the world are looking at selling from. But when we want to really trade, we want to understand how the market works, and the market works in a certain way. If it's not going to range, which the support and resistance apply, then it's going to trend, and when it's trending, support and resistance don't usually work. So going with support and resistance would mean that you will be selling at the higher high, and that's very dangerous when price has started giving a clear direction where it's going. You do not want to be doing that when you see a clear range. But when something is moving sideways, yes, you can take your support and resistance. But when there's a clear direction, you want to take your trades from the higher low. That's for an uptrend. That's the most important places where banks, institutions, hedge funds, people who have been in this industry are looking at. They're looking at where is the higher low, and higher low is also called support. But retail traders are usually focused too much on those terms. The terms don't matter. What matters is your trading plan, how you understand the market. How I understand the market might not be how you understand, but you should understand that there is a defined way the market moves, and it makes, if it's going up, it's making higher lows and higher highs. If a higher low is made, just like the law of nature, a higher high should be made or will be made. So you want to be taking your trades at those points where the trend is going up when it comes to an uptrend. And let's look at an example for Euro USD so that we can understand this key levels. When I say support and resistance, I don't really mean support and resistance, I mean key levels. So averagely, you see a retail trader mark here as his level and mark this point as his level. So this will be his support. So the second tap, not the first one, this place is not his support. The second tap that makes it a support. Then he will mark here and mark here. These are places where he can buy. Then for selling, he want to sell here, he want to sell here, and he want to sell here. Now if the market breaks that support, obviously his next plan of action is to draw a new support. So he'll draw a new support here and want to draw a new resistance here. But like we said, the market, if it's not in a ranging market or in a sideways movement market and it's clearly tilting towards the direction, then support and resistance is not going to work. So you need to now learn, how does the market move? And that's why we keep saying that the market moves in structures, and if it's going up, it's going to make higher lows, higher highs, higher lows, higher highs. And those are the key levels. They are not called support, but they're called key levels that you want to identify in the market, and you want to keep identifying those key levels in the market. And those are areas where you want to pick your trades from so that you can continue with the trend. But if the market begins to range again, yes, definitely you can use your support and resistance, but not all the time it does. Do you want to just focus on only support and resistance? And even if you focus on support and resistance, you need to understand, how do you take trades in a support and resistance market? It's not every time you just see a support you just immediately jump in. You need to understand what works for you in your trading plan. Follow what works for you, but know when the market is not ranging, then you should follow the trend.